So good morning once again. So today we'll be rounding off with the training. We're rounding up with the training today. It's been up to like, is it not like 2 months or so? Can you hear me?
I can hear you, sir. It's up to like 2 months, sir.
Can you hear me?
I can hear you, sir.
You guys get everything clearly. So that's why I've taken my time from the beginning to the end to put you through on the Zoho software. So today we'll be looking at reporting today. Now, if you can recall, just like I normally do whenever we start the training, that we started with the dashboard, right? When you open Zoho Books, and I told you that most of all this software, they are more like, they are almost the same. The only thing is just the dashboard, the main everything. But all the process of using it, posting, everything, they are more or less like the same thing, right? So if you know Zoho Books very well, you can use the other software. Do you understand? So I've taken you through the dashboard, and as you can see, this is the dashboard. I've taken you through the items where we record all the products, right? So that's where you have your inventory. And I've told you about sales. That's where you do all your invoice, register your customer, and the likes. So you receive money into your business for your sales. Then we've also touched purchases, when you want to buy from your suppliers or vendors, right? So we've touched on it. And still on the purchases, you can, on this expenses angle, you can use it to also post your normal expenses like telephone, internet expenses, right? Telephone, internet expenses, transportation, right? Electricity, you can use it to post it, right? So I've demonstrated that to you. So you can all see it here. You see the expenses account, right? You choose the expenses that you want to post to advertising and marketing. You choose it, right? Then you put the amount, put your normal amount here that you are posting for, put it there. Then you select the account you are paying from, which bank. You have set up your bank account, can choose it. That's where the money is going out from, right? So then you put all your information, your notes, advertising and marketing expenses. You put your notes, then you save it. You put all your data and everything, then you save it. So it will eat the ledger's account. So if you are posting for advertising and marketing, you'll be sure that advertising and marketing is debited, and then your bank is what's credited. So you must know that when you are posting, right, you must have all your source documents ready so that you post correctly, the correct amount, the correct date, the correct description of that transactions, right? Because the description of that transactions will let you know which ledger account are you posting to. Do you understand? So that's why you need to get the correct information, the right source documents when you are posting. So once your posting is correct, right, everything is ledger account, and at the end of the day, in all your posting, you are going to get your reports, whatever reports you need, the report of that particular expenses, you will get it. The report of your bank, how money come and how money went out, right? Came in, went out, you will see it from the bank. You will see the report for all your sales by customer and everything. We are going to be looking at all that today. So I'm just refreshing your memory. We've touched virtually everything. I've told you how to set up your banking. We've set up banking, right? We've set up banking. You can set up as many banking that the business is using. Then your accountant, you can post for journals. You can post for journals. Any transaction that you cannot post from this place, right? You can post it on your journals as well. You can use your journals to post as well. Then you have your chart of accounts, which we have talked about last week, and we've uploaded the video on the YouTube channel, so you can go there and watch again and again. So you have your chart of accounts where you set up all your ledgers accounts. Set it up here to make sure that it is suitable for your business. Then this fixed assets is for you to just register all the non-current assets, although it is fixed assets here, but we call it non-current asset. So you can register all your non-current assets that you have in the business, right, in this place. After you done all your posting, then at the end of the day, right, you will have your reports. Reports is the end results of everything that we are doing in the software. And reports is very, very important for a business owner, individual business owner, corporate business owner. That's why this software is very important. Companies, businesses that are not using software, and they are meant to be using software, accounting software, they are changing themselves, right? They will be missing out on so many things. So I'll give you an example. There was a place where I once worked, right? And they were not using software. Definitely, I introduced the software to them, but they were like, the money, this, that, they were like, they don't have the money, whereas they have the money, but they don't want to spend. I've convinced them, I've talked to them, we've had meeting, everything, but they still don't want to do it. So one day, a customer now came that, oh, he needs information about his transaction, what he is owing the business. And they were looking for the information. They were looking for paper, looking for record where they wrote it in the paper. They could not see it. And of course, what would they tell the customer? If the customer doesn't have the information of what he's owing, what would they tell him? Where is the evidence? So the customer can say that he's not owing them if they cannot fetch out the record for him to see. And who knows whether the customer is owing them like 200,000 or 300,000, whereas they could have used that same money to implement the software once, and they will getting record, they will getting information about customer, their transaction and everything. So it's good for business to use this accounting software. We're in the modern age and technology is driving everything. So any business or company that are not using accounting software, they will just be missing out on so many things. Imagine you want to know how your business is doing. At the end of the day, you can see it. On a weekly basis, you can see it. On a monthly basis, you can see it. And at the end of the year, you can see it. And the way everything is going on, by next year, the Nigerian Tax Act, NTA, is taking effect. And companies, individual businesses, they will be paying taxes. And if you don't have accounting software, how will you even know the kind of tax, how much of tax you are meant to pay? You understand? That's why we are telling businesses implement this accounting software, and it's good for you that you have been able to learn this accounting software from beginning to the end, which is a good plus for you, and use it, right, to help businesses that may need it. You understand? And if we also have work that might involve you, like we've said, we also call you. Since we've trained you on this, you also work with us on it. So accounting software is a game changer, and most of all these accounting software now, they are putting AI into it. AI will also be part of it. So it's a game changer. So we'll be looking at reports this morning. So we have so many reports, but first, let's enter into the business overview report. Can you still hear me? Caleb, confirm, please.
I can see you, sir.
Very good. Thank you. So let's look at the most important part of the report. Of course, all the reports are very important. So this is business overview. Business overview reports. So think from here, from the business overview report, you can see that it's putting 6. So we have 6 reports under the business overview. 1, 2, 3, 4, 5, 6. You can see 6 reports. So now the first one here is what? Is the profit or loss. Profit or loss. Profit or loss. So look at the profit or loss. At the profit or loss, you'll be seeing your sales. You'll be seeing your sales. Then from sales, your cost of goods sold, you less it from your sales. Then you get your gross profits. Then you now less all your operating expenses, all the expenses that you've incurred in running the business. You look at it, you post it. Once the posting is correct, you get the right report. And you have your operating expenses. So operating expenses minus the gross profit will give you your net profit. But that net profit is what we call result from operating expenses. Result from operating activities, rather. Result from operating activities, right? So afterwards, you are still going to less your finance costs if you don't have it here. But of course, your bank charges is also part of your finance costs. So after your finance costs, right? Because this one is just the normal report, right? Which of course, when we are doing audited account, right, we now take it further from here. But you must get all these reports right, all your posting right from the beginning. Like I walk you through the process of accounting from financial transaction, that is source document, to your journals, to your ledgers, to your trial balance, and the final accounts, right? Once you get all the posting correct, right, we'll also see the trial balance. I will show you the trial balance as well. The trial balance is all the balances in the ledger account, right? So you can see at the end of the day, your gross profit minus operating expenses will give you your net profit, right? So after your net profit, then you can now take it further, do some other things, right? So at the end of the day, you'll be able to know the tax that you are meant to pay. So this is how profit or loss account, which we call comprehensive income statement. So this is called income statement based on IFRS, right? So this is how profit or loss account looks like, right? Once all your posting are correct. So now let's go back to the report. Still on the business overview. So after this, now let me wait first. Let me show you trial balance, because this trial balance is the balances of all the ledger's accounts. So now this trial balance is what you use to prepare your final account. Is what will be used to prepare your final account. So once you have this trial balance, you are going to check it. Check all the posting, whether they are correct, right? Normally, like I told you, you debit all expenses, debit all assets, debit all sales, profit, gains, and then you credit all liability, credit all sales, profit, and credit all liabilities. So two legs, right, for each debit and credit. So you're now going to look at the trial balance, which will finally give you your final account, all the statement of financial position. So you look at it, but this is an asset. Why is asset on the credit side? So you are going to what? You are going to investigate it, because these assets supposed to be on the debit side, right? So that means this trial balance needs to be investigated, because where debit is supposed to be is not where it is for the assets, right? You can see this is asset, and these are the list of assets. So asset is showing on credit side, which supposed not to be. This one is showing on the credit side. This one, credit side, supposed not to what? Supposed not to be. So we are going to investigate it, so that if the trial balance is correct, is okay, right? You can be sure that you will have the correct statement of financial position. That's your income statement, statement of financial position, cash flow statement, changes in equity, and all of that. You are going to have the correct report. So as it stands now, this will need to still be investigated, right? But definitely the trial balance will always balance at the end of the day. But then they are going to look at each ledgers in the trial balance, where they're supposed to be. Are they there? Are they on the debit side or the credit side, where they're supposed to be? So now, under liabilities, nothing is there, but we have equity. Equity is a credit entry, right? So you can see that under this equity is correct, right? But this opening balance offsets will need to go away. It needs to be there. Nothing supposed to be in this place. We're supposed not to have anything here, right? So for you to now investigate, you are going to click on each of these and see what really happened, right? Where did something go wrong? Where did it go wrong? We are going to, check it, check each posting, each entries, right? So that you'll be able to correct it accordingly. That's what you're going to do. So that's what the accounting software will provide for you. You can be able to click it and see all the transactions that have been posted on each of the category of the ledger's account. So move on. Equity is a credit entry. Equity is a credit entry. So the equity that we're supposed to have here is this one. This owner's equity, which looks more like a capital. So is the only one. So this one will need to be investigated and corrected. So you can use journal to post this and correct it. So that's another use of the journals, to correct errors, to correct every wrong posting. So you can use to correct it. Then under income, income is part of sales revenue, right? So it's a credit entry. So this is correct. It's a credit entry. So it's correct. Then this expenses is a debit entry. So you can see they are all debit entry. They are correct. And cost of goods sold is also part of expenses. So, but it's a cost of goods sold. So it's correct as well, right? Depreciation is an expenses. So under the expenses, you must confirm that they are all on the debit side, on the trial balance, right? So anyone that comes under credit side, right, you need to investigate it. So you can see they are all on the debit side. So trial balance will definitely balance at the end of the day. So it is from the trial balance that you now have your final account. So still on the business overview, let's go to cash flow. Next one, cash flow. The profit or loss account, let me come back. The profit or loss account, right, which is income statement, is where you used to know the profits or loss that you have made, the performance of the business in any period, either month, at the end of the month, or at the end of the quarter, or at the end of half year, or at the end of the whole year. So it is the profit or loss account, which we call income statement, that will help you to know what the business have been able to do, the performance of the business at the end of the period. So this cash flow statement, right, is the statement that shows the movement of money in the business, the inflow, what comes in into the business, then the outflow, what goes out of the business, all the payment that you made out to your suppliers for expenses, or purchasing of equipment and all of that. So it's from the cash flow that help you to see all of that. This is how the cash flow looks like. You have cash flow from operating activity. There are three segments of the cash flow. From operating activity, we have from investing activities, and then from financing activity. I will explain each of them. Operating activity means that all the normal operation of your business, the way your business is running, everything. So you have all those transactions, the movement of money, right, under this place, under operating activity. As you are running your business, everything that is going on within your normal business is under the operating activity. So you can see accounts receivables. That's the money you are expecting from your customer to pay on their invoice. This one to cooperative savings, right? Then you have your inventory assets. If it's a company that deals with inventory, selling of physical products, you have it here. Then net income, you have it here, right? So this is from your operating activities. Then the non-cash adjustment, this is depreciation. It's a non-cash adjustment. So you also have it under the operating activities, right? So at the end of the day, you have your total. Okay, you have to have your tax payable if there's anything like that. Then on earned income, if you have anything like that, it will give you here. So at the end of the day, you have your net cash provided by operating activity. You have the net from the inflow and outflow. So you have the net from here. Then the other segment of cash flow statement is investing activities. Investing activity. So if you invest in anything, right? Maybe normal investment, or you invest in plant and machinery, in equipment or anything, it will come under this investing activity. So, but we don't have anything here for this period that it has been set to. There's nothing here, right? So that's why you don't have anything under the investing activities. Then the last segment, which is the third segment of cash flow statement, is what we call financing activities. finance, the money that you bring in into the business, right, to run your business. How did you get the money? Is it from the capital, from owner's equity, the money that the owner himself bring into the business, right? Or maybe you obtain loan from bank, or maybe you get any grant, any money that comes into the business to finance that business under the financing activities, right? So that's why we have this. This must not have anything here. It's good. We don't have anything here. So owner's equity, the money of the owner himself, right, is what we have here. So it's under the financing activity. So at the end of the day, you should have net cash, net change in cash, this, ending balances, this. So whatever you have in this place must be equal to what is in your bank account, because it is cash flow, inflow and outflow, right? So that is for cash flow statement. It helps you to monitor all your flows, transaction flows, money flow into your business. So you can see how good the accounting software is. It's very robust, very, very robust and very useful for business. So let's go on. Let's look at the third business overview report, balance sheet. This balance sheet is what we call statement of financial position. It helps you to know assets and liabilities and owner's equity. Your assets, all the assets that you have, either current or non-current assets, all your liability, your obligations, the money that you're supposed to pay to suppliers and any other person that you are owing, bank and other people. Then owner's equity, the capital of the business owner, right? So you have all those balances in the statement of financial position, which is generally known as balance sheet. And then the balance sheet must balance. So in the balance sheet, we have categories. That's the element of the balance sheet. You have your assets. So under the asset, you have your current assets, which will be your bank and other cash. So that's why you have it here, your bank and all of that. You can see that's assets. Then you also have other assets, that's non-current assets and any other assets that is not part of current assets. So you will see it here, right? You see it here. Then other elements of balance sheets, that statement of financial position, is, of course, at the end of the day, you will have your total assets. So you can see we still have fixed asset, which is non-current assets. So you can see it here. So this non-current asset, like I told you on the balance sheet, will still be investigated because it's carrying negative, balance. So then after that, you have your total assets. After the asset, you have liabilities and equity. So you have liability, as we have current asset, we also have current liabilities and non-current liabilities, that's long-term liabilities, right? So you can see what we have under liabilities, current and then long-term liabilities. Then after the liabilities, we have the equity, right? Owner's equity, current earnings and all of that. So you have it here. So it will give you the total for equity, right? Retained earnings, all the profit that you have made from the beginning of the business to the current period is what will give you the retained earnings. And then at the end of the day, your total liabilities and equity, right, must be equal to your total assets. So you can see this 614,361.11, right, is the same here. 614361.11. So balance sheet will always balance, right? So it is a statement of financial position, the position of your business, the way your business stands, right? Is it on a right standing or on a wrong standing, right? You'll be able to see. And your asset must be more than liabilities, and your must be more than your liabilities, right? So that shows that your business is healthy. So that means you are in a good standing in your financial positions. So that is the statement of financial position. Let's look at the other one here. Here, business performance ratio. So you can also do ratio, right, in your business. Ratio of this against this. So look at the different ratio. Current ratio, can do current ratio in your business. So you can do current ratio. Under current ratio, the ratio is just to see relationship between this and this, between asset and liability. Your asset must be more than your liabilities. Of course, what you own must be more than what you owe, right? Because if it is the other way around, if what you are owing people is more than what you own, what you are having, there will be problem. That's why many businesses will liquidate, will go out of business. So this is current ratio. So you can see under the current ratio, assets, current assets, current liabilities. So you can look at them side by side against each other, right? Against each other. So that is what ratio will give you, right? That's what ratio will give you. Current assets, current liability will give you your current ratio, right? Then another ratio, we have different ratios. Gross profit ratio can also have gross profit ratio, right? Gross profit against sales, against net sales. So you can see it, you can use it, show the relationship between them, right? Then your debt ratio, they are owing, net profit ratio, asset test ratio, receivable turnover ratio, debt to equity ratio, operating cost ratio. So many ratios you can use, show the relationship between one account against the other account, one ledgers against the other ledgers, so that you will know that your business is in a good position, the performance is okay, is fine. So let's look at the other one, cash flow forecasting. You can also forecast your cash flow if need be. You can forecast, you can, okay, in the next 6 months, this is how we want our cash flow to be, and forecast it. Or maybe the one that have happened. Of course, whatever has happened before, you can use it to project what will happen, in the future or later on. So you can see cash flow forecasting. You forecast, you predict, right, to see what will happen in the future. So that is what cash flow forecast is, the money that will come in and go out. Can you hear me, Caleb?
Yes, sir, I can hear you, sir.
Very good, thank you. So movement of equity, this is another business overview. Movement, how money is moving, right? Equity, the owner's money, the owner's stake in the business. So you can also get the report of it here. Opening balance here, net changes in equity, nothing changes. Closing this, right? So this is equity. So it's showing negative, which is not a good sign. It's not a good sign. So that is the business overview reports, which is the most important report for the business. Then we now have other reports, all the ledgers, right? Each ledgers, you can also have reports of it. So look at sales. Sales is a ledger, is an account on its own. So under the sales, you can see sales by customer, the customer that have, patronized your business. You can see it. Sales by customer. So if you open it, sales by customer, you can be able to see which customer have been able to patronize us. So if you have put all the information correctly, you will always, have it here. Although this one is showing from 1st of September to 30th of September, that's why nothing is showing here. But by the time you set the range, maybe this year, and then see the reports, so you can see the customer that patronize you, right? You'll be able to see how many times, so that you'll be able to maintain good relationship with all those customers, right? So that is it. So let's still move on. Under the sales reports, sales by item. Which item, which product do you sell more? You'll be able to see which product is selling more, so that I can be able to put more effort into it and market it well. Be able to see which product. So you can see this annual returns, this filing and all of that. So you'll be able to see. This one is having 6. So that means taxes, tax services. You can see. Because people will always have problem with tax. You understand? Individual tax, corporate tax, business tax, every tax. There will always be one issue or the other. And as a consultant, as an auditor, as a chartered accountant, you'll be able to help them to, resolve all their tax issues. So from all these products and services, you can see that tax, is the highly rated of the business, of the products or services that is selling more. Then followed by annual filing. People must always file their annual returns, file returns and all of that, right? So you can see. So taxes is the number 1 rated, right? Then you can now, of course, implementing accounting software, this, that. So you can be able to see those products so that you intensify effort on it and generate more revenue from it. Let's see, move ahead. So sales return history. If you have any sales that was returned or rejected, you will see it there. Sales by sales person. If you have sales representative, who among them are selling more, right? You'll be able to see it here. Packaging history, sales summary. So you can be able to see the summary of all your sales under this sales summary, right? You'll be able to see it here. So you'll be able to see it here. So you'll be able to see sales summary, February, March, April, May, June, July. So you'll be able to see all those information. So after that sales, look at another report, another ledger report, inventory. So your products, product or services, you see all the reports. So you can see report of everything that is going on in the business. Receivables, the ledgers, you see the report. Who is owing you? How long have they been owing you? You see it. You see everything. So under the receivables, payment received, who pay more, which customer, right? You see it there. Recurring invoices, invoices that you always give out. Payables, which suppliers are you owing? You also see it here. Purchases and expenses, you see it there, right? What did you purchase? The expenses you incur, you will see it. Everything you can see that is very robust. Tax summary, all your taxes, you see the summary here. Banking, reconciliation, time details, time time sheets, all of that. Project summary, your non-current assets, fixed asset register, you will see it. Accountant, all the account transaction, account type, general ledgers, right? You see everything. Journal reports, trial balance, budgets. You also have budgets, especially for clients that we implement Zoho 1 for. If you implement Zoho 1, you have everything, right? All your ERP, enterprise resource, everything, all the departments of the business, you have it here. So you can see activities, automation, so your workflow, everything. So accounting software is very good. It's very, very, very good. Very, very good. And you can open it from your phone. You can open it on the system. If you are on transit, you want to get information, you can always get it. So accounting software is the best. Is the best for any business, right? To implement any forward-looking business, any business that is aiming to, make impact, get, things done quick, make quick decision. Accounting software is a game changer for them. So I'll be, stopping here so that if you have any question, you can be able to ask.
Okay, thank you very much, Mr. John. I really appreciate the wonderful session we had today.
No.
So I want to ask, how can one install the software? Like, what's the procedure? Or I want to set up the software now. How do I go about it?
So in setting up the software, right? Because most of all these software, they are cloud-based, right? They are cloud-based. So since they are cloud-based, so in setting it up, of course, once client approach us that they need accounting software, we will get it for them, right? Once we get it up for them, we will now get some information about the business and then set it up from our end, right? Of course, you can also, invite them for meeting, like we can have meetings just like we are showing you like this. So we can, set it up for them based on the information for that business. So once we set it up for them, right, then we can now give them link, right? We've done all what we need to do from our, we give them link. So you can see that from this screen that I'm showing you now, you can see that it's more like I'm on the www website, right? Like I'm browsing. Do you get? Because the software is on the cloud, right? It's not something that you have in the system. It's on the cloud, meaning that you can access it from anywhere you are. Not necessarily that you have to carry the system that you are using to access it. No, you can use any other system to access it. Once you have the access to the link, right? You can have access to it on your phone. Do you understand now? So the installation is cloud-based. It's already on the cloud. Once we get it for you, we set it up. It's already on the cloud. So we just give you a link, right? Your link, your access into the software, then you can be using it. Do you understand?
Yes, thank you very much, sir.
You're welcome. Any other question or clarification?
That'll be all for now, sir.
Okay, thank you very much. So if let me add this to that installation. If you have now implemented it, if you implemented the software, right? Like I'm on this place now. I don't know if you can see this Zoho this thing. So you can now come on your system, right, and pin it. You can pin it into the software, into the system, right? So that you now be browsing every time, right? Browsing every time. You can pin it down. Once you pin it down, you can now click it, right? If you pin it on your Google Chrome, which is the website to access website, it will be there. So you can just go there to that. Once you open that Chrome, that Google Chrome of your browsing, it will be there. Then you just click it because you've already, pin it down on that Google Chrome that you are using to browse. Then it will be there, right? But if you are not sitting in the office or sitting at home to carry the system that you are using it to access it, then you can go to the website of that software and then access and enter there, because everything has been installed on the cloud for you, meaning that if anything goes wrong with your computer, your information is still there, right? Because it's on the cloud. So all those ones that they used to install on the system, desktop or laptop, all those ones they are not cloud based, right? They are not cloud. If anything goes wrong with your system, all your information can be lost. But the one for cloud is the cloud own that we used to implement for people, so that all their information is secured on the cloud and they can access it any day, anytime. So that's the clarification on that. So with this, if there are no any other question or clarification, with this, we've come to the end of this accounting software training for you guys. So we've come to the end of the training, and we believe that with this training, you've been able to acquire a very good skills, and you can use it any day, anytime. You can use it any day, anytime.